Thank you, Chris, for having me here. It's a pleasure to be here. I am Abhinav Anand. I'm the head of value and lending portfolio at Citi. And I'm the guy who focuses on how everyday customers relate to money and make decisions regarding their spending and borrowing needs.
What would you say are the top three things that keep you up at night?
So top three things that keep me up at night. Look, if you think about us in Citi and in general for me in my career, we have always been obsessed with our customer experiences. We continue to think about how can we stay relevant in meeting the customer needs. In today's world, the customer needs are evolving, the trends are shifting much more rapidly than it has ever been, and I'm sure in future it'll be even faster than this. So what's the thing that keeps me up is to think about how do we keep ourselves relevant and keep ourselves a bridge with our customers. So let me talk about that as an example. Today's customer are getting more value conscious. They are looking for more flexibility and control over their payments. And that's what's making pay over time a very relevant product. And not only that, customers are now looking for their financial institutions who they know, they trust, to provide products like those. The other thing I also obsess quite a bit over is how our lives are changing around the digital world. If you think about it, all of us are on our phones all day long. I was looking at it that now the average American spends 5 hours a day on their phone. So imagine that number of time being spent on a phone and how the digital life is intertwining with how it relates to money. In fact, for most of us, our phone has become the de facto wallet where they carry not our credit cards, but also licenses and other important pieces of information about us. So I obsess a lot over that and think about how do we change the thinking from being what we have always called digital native to really follow the customer as their digital lives evolve. And I truly think banks who do well on that platform are going to win.
And I guess maybe you kind of touched on this, but what do you think the next decade would look like for your business unit and for the bank as a whole?
Oh, that's one of my favorite questions. So look, I think a lot of things are changing in the banking world. I can give you 3 opportunities which I think is worthwhile for us in banking and fintech to focus on. Number one is what I call the new spend borrowing continuum. And let me try to explain that. Historically, banks have always thought about spending and borrowing as discrete customer needs. You have one product for spending, some other product for borrowing. But that's not how customers think about it. For them, it's a continuous spectrum. And what it means in practical sense that we have to evolve our product offerings to create products that offer spending, short-term borrowing, mid-term borrowing, and long-term borrowing all in one product. And I can give you a good example of that actually comes from our own shop at Citi. We have been observing those trends. And today on our credit card portfolio, and you know that we are one of the largest credit card issuers in US, we offer products such as Flex Pay, where the customers can put their purchases over monthly installment and pay that out in short term. We call it the smart way to pay. Then we also have balance transfers, which customers can take for a medium period of time, call it 10 to 15 months. And then for their longer term borrowing needs, we have something called Flex Loan. So an unexpected expense happened, you can take a loan over 60 months and pay it over time. All of them on one product in a simple, intuitive UX. I think the second and very interesting thing that is evolving in the market is what I call faster and transparent payments. We hear a lot about RTP, FedNow. We talk a lot about how customers want to interact with bank when it comes to payments. And what's happening, and it's going to continue to tilt, is the speed at which payments move and the transparency at which you are able to do that. And customers want that, along with the security that a bank can provide. And I truly believe that companies and banks that are innovating and investing on that, and perhaps this could lead to even other financial products that we haven't even heard about. Last but not the least, it's very close to my heart. You asked the question, what keeps you up at night, is accelerating digital innovation. We talked about how customers' digital lives are evolving, and we need to be at par with that. I was reading a McKinsey report recently, and since we are talking about payments, 92% of customers have actually used digital payments in the last 1 year. That's a very high number. And that number has grown astronomically in the past few years. So I think the real question becomes here is how do we keep on track of that and how we do that across the board? And we have tried to do that in Citi. We talked about FlexPay, a product that we have launched that is fully digitally available. And the recent thing we have done over there is we are the first bank that has embedded installment lending in the form of FlexPay into Apple Wallet, which, as you know, is the largest wallet, one of the largest wallets used in US. Now, customer can access a way to pay smartly at the point of sale. And we are one of the first ones to do that, but that's evolving with that need, but I'm sure there are many more things to come that we'll have to think about. We have to work with our customers, understand their needs, and continue to innovate. So those are the three things I'll say are biggest opportunity in front of us.
One thing I keep hearing is a challenge for banks is around legacy infrastructure and the constraints that puts on the ability to innovate. So let's say you had a magic wand, you could dream up the new Citibank. What would that look like if you could do it all over again from scratch with a clean slate?
If I think about that, and of course, we do get the benefit at Citi of our history and scale, and that allows us to serve our customers with the right set of products. So we do benefit from scale. So I want to make sure we understand that scale has its own benefits. I think if there are opportunities for us, if you have to start something from scratch or even continue to evolve on our digital transformation journey, we need to think about modularizing how we build our infrastructure. We talked a lot about customers' needs are evolving, so you just don't know what it will look like 5, 7, 10 years from now. And a lot of the legacy problems any bank has is historically they have built around one certain type of product with little or no flexibility to change it over time. So number one is modular capabilities, things that allows you to evolve over time, things that allow you to customize it more for particular customers, because customers today look for more flexible solutions. So I think that's number one big area of focus that I will put in play so that we are more future ready. I'll never say we'll ever be future proof, but I don't think there's something like that. We'll be more future ready if we have to invest again and build a banking stack.
One quick way for banks to innovate is to partner maybe with a fintech, which obviously is a little bit more agile. How do you think about whether you should build something in-house, whether you partner with someone, or you emulate, or maybe just invest and become a client? How do you think about partner versus building versus buying?
Look, as we look at capability set that we need to have going forward for our stack, we always look at what are the areas where we truly have unique abilities, something that can become our competitive advantage. You need to have a very clear insight of what those things are. Once you know that, then you decide build versus buy. Build could take a little bit higher capex, but might be better for you to control the experience. If you're going to thinking about buying, then you could always think about buying a fintech that is already doing a lot of innovation in that area. You have seen across different banks, including Citi, and I'm sure you're aware of Citi Ventures, where we spend a lot of time really looking at what are the evolving fintechs and where we should be investing as a venture arm of Citi, and also partnering as we continue to build our capabilities. I think it boils down to where you want to have competitive advantages, where somebody else can provide you that, and also where a fintech can come and really help you test the market and allow you to expand the scale where you just don't have prior experience in.
So obviously you think a lot about what's next, and you're looking at fintechs and innovations in general. Are there any trends that you think are being overlooked or underestimated, or reversely, maybe perhaps overhyped and overinflated?
So I'll give you one trend which I think is perhaps overhyped by, to use that word, because if that's the word you prefer to use, but perhaps overcalibrated by certain folks versus underestimated by others. And I'll call it the account-to-account payment trends that you are hearing a lot about. I'll give you a few numbers to kind of illustrate my point. Account-to-account payment is big in Europe and Asia. In India, for example, 30% of transactions are account-to-account today. These are transactions that a customer is paying a business, so more of a point-of-sale transaction. Of course, as you know, it could be different forms of account-to-account transaction, B2B, C2B, B2C, and these days the government to consumer and consumer to government. But if I purely focus on B2C, which is where we play in a bit, you'll find 30% of payments in both Sweden, Brazil, and I believe in India is around account-to-account. US is only 2%. Yet there's a lot of focus and a lot of interest in account-to-account payment. And then equivalently, there are others who are saying this is not going to take off in US because of customer preferences. But again, if you go back to what we talked about in the early part of this interview, customer preferences are changing. And as you make this a little low friction, easy for use, I'm pretty sure customers will be very interested in account-to-account payment. Goes back to the second point of opportunity I talked about, faster and transparent payments.
Yeah, because I guess people appreciate getting credit card points, and if it's bank to bank, you don't get that.
You don't get some of those. You don't get the protections of credit cards. But things are evolving and customers would have different needs, and every of these products have a way to play.
So thinking ahead then, kind of building on that answer, I suppose, what makes you the most excited about what's to come? Is there anything you're working on right now or your team is focusing on that you think could be the next big thing or be transformational for the bank?
I truly think that, and we are very focused on this, the pay over time as a concept is evolving quite a bit more. We talked a bit about why value-conscious customers want that control and flexibility. And we launched FlexPay a few years ago, and since its inception, it has seen almost double-digit growth, which is actually confirming that customers like that particular product. There are different ways to do that. We have taken the approach where it is actually part of your card, where you can very easily use that both after the purchase or at point of sale right now with Apple Wallet, for example. And you can decide to pay it over time with monthly payments where you know exactly how much that monthly payment is going to look like, how much fee you are going to pay. All of the transparency and value that products can create, we feel very excited about that. We want to continue to work and grow that portfolio, grow that product, meet the customers at more point of sale opportunities, especially in e-commerce, as well as working with Apple and others at the point of sale. We find that product to be very exciting and interesting. While it may still be on a credit card, and you can say, hey, credit card has been there for a year, what's exciting about credit card? You pay over time, you get the flexibility, you get the control, you get the benefits of a credit card, the rewards that come with it, and the security of the fact that the bank would take care of you in case there is a dispute. You don't get that in many other such products that are available in the market. So we feel that is definitely something that is going to win in the market, and we'll continue to focus on that.
So two of the bigger players in that space is Klarna and Affirm, and their USPs, they give new customers new lines of credit at the point of need. Whereas if I understand you correctly, you have to be a Citibank customer, you have to have a Citi credit card. How do you think about the pros and the cons of that limitation or opportunity?
I look at that as more of an opportunity. Going back to what I said earlier, the spending, borrowing needs is a continuum. Again, we are trying to solve it so far through some of the other larger players. And by the way, we have a lot of respect for them as well by just solving one discrete borrowing need. Over the long term, and we have to figure it out how to make it accessible to more customers, we look at it as an opportunity. The credit cards with pay later, credit cards with actually pay over time have a way to win. I'll quote the latest J.D. Power's ranking. Citi was in the top 3 buy now, pay later. They use the word buy now, pay later. First top 3 buy now, pay later products in the market. And guess what? The other 2 were banks. So it tells you a little bit about the fact that the customer value this as part of just one product or one place where they are actually banking.
Fascinating insight. Thank you very much for taking the time to share those with us. Appreciate that.
Thank you so much, Chris. Thanks for having me here.